India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's Tuesday morning in this holiday shortened week. Yesterday, of course, was all over the place and finally a flat close. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, guys. Morning. I think that's a very important cue. It's a holiday shortened week. I'm going to hold on to that as we start.
Well, that's right. But plenty of action today. You have the MSCI rejig. You have crucial economic data coming out of the United States later this evening. So we have got our hands full. Prashant, go for it.
And we have very good inflation data.
Absolutely.
Which I think is important. Very important because, we are tied at the hip, of course, to what the global central bank cycle is, which is what the Fed really initiates. But, you need to have comfort here on inflation as well. And that is sort of cooled off. And we'll talk more about that. But let's begin where we left off yesterday. So we yesterday had a sort of swinging kind of a day, right? I mean, the market sold off right at the word go. There was a sharp recovery, almost 250, 275 point recovery from the day's low. And then there was another sell-off, which took us back to flat zone. So absolutely nothing by close at about 24,347 on your screen. But I must highlight that there were lots of at least 10, 12, 15 big mid-cap moves, both up and down. I'm talking about 7, 10, 15% moves up and down based on specific news flow, earnings and otherwise. Actually, it was mostly earnings, some from last week, continuing action, and of course, some which came through yesterday. And we'll discuss some of these stocks a little later. So it was a really vibrant market. It was not one way up, one way down at all. Overnight, it's been flat close. I mean, zero change on S&P, so that flat. The Dow was down about a third. Nasdaq was down about a quarter. Nasdaq was up a 0.25%. 3 out of 11 sectors ended in the green. Only 3, I should add. So it was actually pretty mixed out there. Nvidia was up 4%, and this AI-focused sort of stocks did a little better, but that could just be pullback because they're all on an average down about 18, 19% from their recent highs. There was a Fed survey which came through which showed increased consumer balance sheet stress. It also has a component which measures inflation expectations going forward, and that came off sharply. So, the consumer is weakening a little bit, maybe at the margin, and you got inflation expectations coming off. Not exactly the worst data. As I've been saying, markets very focused not on inflation anymore, but really on the health of the consumer and how fast that is deteriorating or not. Now, the 10-year lost about 3 basis points. Dollar index was down about 0.14. So these are not big changes, small changes. Oil had a big move. It shot up 3%, and this is on back of geopolitics. The Israeli military essentially announced that they are going to their highest state of alert. And, there have been lots of news reports saying that how they're anticipating attacks from Hezbollah and other parties there. So geopolitics really up there and pushing oil prices to about 81.88. By the way, on I think WTI, we are already past the 100-day moving average. It's taken that out. So that is oil. Spot gold prices, I think, on the back of some of these geopolitical concerns, also went up about 1.5% or so, which then gets us to the environment for the market here. It's a little mixed still. Look at what's happening around you, around Asian markets. I think Japan, which was shut yesterday, is trading. It's up about 2% or so, maybe a little bit more. But other markets broadly are all kind of flattish. Nifty resistance, basically 2 levels which the market needs to take out. One is the 20-day moving average, which now, as of yesterday's close, stands at 24,536. And then you've got the 24,625 level, which is the 61.8% retracement of the decline, a level we put out yesterday as well. On the way down, supports come in. Basically, the 2 swing lows, 24,080 and 23,893, which is essentially the absolute kind of bottom. You're basically looking at a ranged market. On the downside, around 23,900. On the upside, about 24,600. That's essentially broadly the range you're looking at. Bank Nifty saw another positive daily close, and it's outperformed what the Nifty did. but without really adding too much to the overall index picture because everything else was kind of weakish. Resistance here is the 20-day exponential average, which is 51,292. And then the 40-day exponential comes in at about 51,032. And on the downside, these are support levels, which I put out yesterday as well, 51.53 and 49.659. The GIFT Nifty will come up on your screen, indicating the kind of start. I mean, I think almost yesterday, same time, you had a similar kind of a picture, 36-odd point lower start, flattish kind of day, lots of pulls and push on both sides, which I think continues today as well. Really, it's about individual stocks and sectors, which we will get to in just a bit. For the index, as I said, kind of arranged in this broad zone. Surabhi.
Absolutely, Prashant. I guess we're starting with a bit of caution, but also some underlying optimism that, we're not looking at anything which is very negative in overnight cues. Just to the point on oil, so the rally, the geopolitical risk premium that kind of got built in, that took Brent up almost to 82. We're back at those levels. Remember when the whole global sell-off was happening, we were looking at Brent in the low 70s. So from that point onwards, there's been a very sharp recovery. The other mixed cue on oil, which is keeping a lid on further gains, is the fact that OPEC is not sounding very bullish on demand. In fact, yesterday, OPEC cut its own estimates in terms of oil demand by not too much, but about 135,000 barrels per day. So they're saying because of lack of pickup in the Chinese economy, they're not expecting demand to be as robust as when they had first given out this projection for 2024 back in July of 2023. So that's on oil. Let's quickly move on to flows, and not much has changed here. FIs continue to be on the sell side. Yesterday's selling picture was around 4,680 crores. As usual, domestic institutions are lapping up that exodus that's happening. So almost 4,500 crores of buying by domestic institutions. Just want to spend a minute on the macro cues because they're really important. And again, they're mixed. So IIP was not that great yesterday. The IIP growth in June is at 4.2% versus 6.2% month on month. So that's a bit of a dampener. The misses have really come in from manufacturing and electricity. Those are the two subsectors that have not fired up as well in June. But the big cheer is on inflation because for what it's worth, that headline number on inflation has fallen below RBI's 4% target for the first time in 5 years. 3.5%. That is what the headline consumer inflation number is reading. And it's a distance from the June number of 5%. However, before we start getting overexcited, economists will tell us that this is because of the high base effect. But again, I'm saying for what it's worth, it's a great headline. It's a positive headline. And food inflation, which the governor alluded to even in the last policy that just concluded, that's come off very sharply. Food inflation, vegetable inflation. So that's really good news. But of course, we have to see what happens once the favorable base wears off. In terms of post-market results, Vodafone Idea is going to be a talking point today for obvious reasons. The losses have narrowed a bit now from a loss of over 7,000 crores to at least 6,000 plus. The ARPU hasn't moved up much, but it hasn't fallen, so ARPU is steady. I looked at IRFC, considering the market's excitement around this stock. The numbers are very flat, so let's see if it manages to hold its own ground. Today's major results include Hero Moto, Hindalco, and Apollo Hospitals. That's on the results side. HDFC Bank is going to be in focus. We'll spend a lot of time talking about it because that MSCI weight increase is finally happening. More on that as we go along. But on a side note, I want to end with the tax collection numbers that are looking really healthy. Direct tax collection is looking very robust, 23%. But the number to note, look at the year-to-date collection on securities transaction tax, STT. That number has galloped over 110%. So, Nigel, guess who's having the last laugh? Government of India, really liking this.
All right. Well, let's get straight to trade action then. In today's trade, well, we have another weekly expiry that plays out. So you have the Nifty Financial Services Index. That'll play out the weekly expiry since it's a Tuesday. So that's one of the cues you need to track. Second up is going to be HDFC Bank. That's going to be the stock in focus. The MSCI rejig announcement, that fell short of expectations. So the stock could be a little bit subdued to start off with. But there are factors that will support it later on, which I'll get to in just a bit. And the third factor is once we are done with the trading session, we'll have to track the US economic data, which will be an important point as well. What happened in yesterday's trading session? On the Nifty Bank, there's about a short covering that we did see because the open interest out there was down by close to around 3%. Moving to the positioning then, how are the FIs as well as clients positioned? Well, they've not changed too much. So both of them continue to remain net long on the index futures, the FIs as well as the clients. And if you're looking at the FI positioning, it's almost split down the middle in terms of their long as well as the short positioning, almost at 50% apiece. Now, the problem is the Nifty is unable to sustain at higher levels. Yes, we're seeing the dips of the day get bought into, which is very encouraging. I think that strategy will continue as well. But from higher levels, we are seeing some selling. Even yesterday, we came up close to around 120 points. And in the last few sessions, every time we go to that congestion zone, which should come up for you on the screen, of around the 24,350 to around 24,500, well, we do see some bit of selling. So this is the congestion zone as of now. If we get past this level, then you're looking at the 20 DMA. And if we get past that, well, then the bulls will feel much more in control. On the downside, I think till that 23,800, 24,000 mark gets held out, well, then in fact, you still say that this upward trajectory does continue. So that's the line in the sand at around 23,800 because we have bounced from those levels as well. As I said earlier, the Nifty Financial Services Index will play out the weekly expiry, so that will be volatile in the second half of trade. Yesterday, it actually did quite well. HDFC Bank, that's going to be important. The MSCI outcome, well, it fell short of expectation, so that's a little bit disappointing on that front because now that entire rebalance will take place in two tranches, not in one that some part of the street was anticipating. The good news, though, is that there is a very low probability that the second tranche is at risk because it will require huge inflows to get past that FI threshold mark. So the second tranche, in all probability, happens, going by the data points that we have. The other clutch of stocks that I'll be looking at is the Adani Group stocks because of the MSCI comments on them. So that's why they've lifted the embargo on the treatment of Adani Group stocks. Yesterday, the stocks were a little bit subdued, but this is the positive news flow. And some of those that are part of a couple of indices are up for you on the screen. So keep an eye out on HDFC Bank. Starts off a little bit subdued. I think it gets support at lower levels. And Adani Group stocks as well. That's the other, clutch of stocks that I'm looking at.
All right. Nigel, thanks very much for that.